Hi everybody, it's FIBO Group and you are watching to the Market Watch Review. Indian stocks posted their worst week for 6 months. The benchmark Nifty 50 fell below 18,000 and closed down 1.77%. The S&P BSE Sensex fell below 60,000 for its first time since 28 October. This was the worst week in 6 months for the Nifty and Sensex. The European markets were slightly higher, with the Stoxx 600 rising 0.4% and DAX increasing 0.4%. Wall Street's major averages were lower on Thursday due to the Nasdaq's drop of 2% leading to losses. As traders wait for clues from the Federal Reserve, the U.S. dollar is being cautious ahead of the latest inflation reading. The gold price was flat in early Asian hours Friday as traders awaited more economic data. Expectations of a drop of Russian crude oil supply led to oil prices rising 2% Friday. This helped to offset concerns about a slowdown in U.S. transportation fuel demand growth due to the looming Arctic storm that could threaten travel during the holiday season. Asian Pacific market. Japan's core consumer inflation reached a new 4-decade high. Companies continued to pass rising costs on to households. Data showed that this was a sign that price increases were widening. This could put pressure on the central bank to reduce massive stimulus. Japan revealed Friday a record 114.4 trillion yen budget for its next fiscal year starting in April. This was driven by higher military spending and higher costs of Social Security for a rapidly aging population. The Japanese yen is consolidating in a narrow range near recent highs. Although the Aussie bounced around the 0.6640 mark, it could be a correction move. Market of Europe. In thin trading conditions on Friday, the British pound edged higher against the US dollar and euro, but was still poised for its third consecutive weekly decline against both currencies. Last week, the pound gained 0.2% against $1.2055 for the dollar. On Thursday, it reached its lowest point in more than 3 weeks. Sterling has risen 8% against the greenback over the past quarter, heading for its largest quarterly gain in 13 years. This is due to a slowdown of U.S. inflation that prompted bets that Fed would soon cease raising interest rates. The euro hovers within the range of data that will be released by the U.S. later today. Market of America. Wall Street's major averages closed lower Thursday, with the technology-heavy Nasdaq losing 2% as investors worried that data showing a strong economy would prompt the U.S. Federal Reserve to increase interest rates longer than expected. Canada's inflation has dropped a bit, but there is still potential for another rate increase. The greenback is falling to the Canadian dollar's recent lows of 1.3580. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.